honest with ourselves, a lot of what has happened in the fintech space has really focused around payments. It's focused around lending. And so the question we're asking is, what next? What's the next frontier? What's the next opportunity? I believe if you're not playing in that space on remittances and transfers and lending, I think really that's really almost a foundation or a core capability that you need to have in that space. But what's the next opportunity? So that's one of the things we'll be looking at. But number two also is looking at what difference is this making in the lives of customers. When I hear the story about Mama Mboga who borrows money every morning continuously, how much is her life changing? Or has she just been put in a habit of micro borrowing and getting it just a small fix to make it? I know for the bankers in the room, I'm probably touching a fuse here, but I think we really need to talk about how much is this really transforming the lives of people. So I think I'll hand it over to the panel, perhaps starting with Eddie. He's been on the banking side and recently also launched a micro lending proposition that has gained quite a lot of traction. So I think over to you. I think we can start on the question about the opportunity.
What is the opportunity for fintech? I think if I answer that question, I'll be selling out our business model. But I think you have to look at the last 10 to 11 years. Specifically, I speak to Kenya and broadly around Africa. And if you see from the presentation before from Lenin in terms of access to a mobile phone, etc., access to the internet, growing significantly well and fast in Kenya and in Africa. And then the entry of mobile money, as well as the development of mobile banking from the banking side. I think if you look at those 11 years, 12 years, over this time, there's been significant acceleration towards predominantly how financial services is accessed. And I think it was a very humble thing that we did. Back in the beginning of my banking career, that was around the same time, I had a very long title. We didn't have the words fintech and digital then. It was proximity and remote banking. But what we were really trying to do is, how can we allow a customer with a bank account to access that financial service or to access that account conveniently? So, and that's what the really humble premise began from. I think if you accelerate and move forward 10 years on, we're not talking about access anymore. To the point where, we first started out with, okay, what is our core business? It's banking. So what is our biggest product? Lending. So now that we have mobile, as the telcos ran off and figured out payments, we iterated and simply took loans and put it on a mobile phone. So I think it was an unintentional mistake or outcome that we can now offer money to consumers faster than ever before. We can allow money to move faster than ever before. But I think this has been what we've seen mobile money has given us. And what we see now, 10, 12 years on, is new business models are starting to come out. There's a business models from the banking side. So the lending, the payments, the remittances, because of the existence of mobile money and mobile banking, those are significantly accessible. There are the other new business models that are evolving, and that's what I call about the post-mobile money era, from betting to gambling. We all know those new business models that are evolving, but even the new progressive ones like e-commerce, etc., from BitPesa. So there are new models coming out, and we're seeing the benefits of mobile money, unintentional. But I think now we need to move away from simply being able to access financial services to what is the quality of the financial service you're accessing. And that's why I like your question about the Mama Mboga. In as much as we are simply giving her money at the beginning of every day, how are we transforming their lives? And that's where the real opportunity is. That we need to move away from access into quality and start really looking at the post-mobile money era and the new business models coming out of it, and then how can we use technology to significantly improve the quality of these financial services beyond just simply lending payments and remittances.
Okay, thanks. Agnes, I mean, PesaLink, I think by and large is coming to largely play a significant role in the transfer space, but I know there's a lot more, and maybe you can touch on that in terms of what next and what's that bigger thing that that PesaLink is going to be transforming to.
Now, PesaLink is, I guess, part of a revolution that's taking place that's post-mobile money called instant payments. So instant payments, I think the first instant payment service, and when we say instant payment, we're talking about interbank, bank to bank, bank account to bank account transfer. So the first, I think, large recognized instant payment service was in the UK, less than 10 years ago. By the time PesaLink came to market, I think globally there were only 8 instant payment services globally. So Kenya was way ahead of itself. Has the adoption and uptake been what would have been expected? Probably not. But again, if you go back to the history of the ones in the UK and the ones that have come up since, we seem to be walking the exact same journey. So some of the things we're going to do this year is try and see how we can short-circuit that journey. And how do you short-circuit that journey? It comes back to the customer. So what does a customer actually want or need? So today, Kenyans are hustlers. They're hustlers by nature. Half of you here on your phones, checking how the other biashara is doing. Yeah? Was this delivered? The matatu has been caught. We are hustlers by nature. And because we are hustlers, and because we are instant gratification people by nature in Kenya, we consume services, or we prefer to consume services that are fast, that are convenient, yeah, and that have us move on very fast. The people in this room, for example, I really don't expect any of you to have walked in and sat in a branch of a bank in the last few months. Why? Because you have the bank on your phone, and you're able to transact almost anything that you need, including ordering a checkbook, including whatever. Now, picking up that checkbook is another issue, but all the transactions that you need to do are on that mobile phone. So if you go back to the customer, the individual customer, fast convenience. Plus, you want to be able to transact whenever you want to transact. You want to be out, we were just shown by Robert how to exercise here. You want to be out watching a game with your friends at 10 p.m. at your local bar, and your friend tells you, I'm selling my car, and you're like, really? I actually need to buy a car for my wife. And actually pay your deposit at that moment. And the guy gives you the keys and you go home with it. Right? You want to be able to, for example, order for new stock of things, yeah, at midnight. And why not? After all, you have been hustling, running around the whole day. When do you finally get home? Around 10. When do you actually settle down to do anything? Yeah? Those 2 hours, and then you go to sleep. So let's look at SMEs. So we've transitioned from the person to now the SME. The person who is actually hustling day in, day out. For example, you're a contractor at Mjengo. You know, you go, you get Mjengo, and you're working there. Today, traditionally, especially in certain industries that have to do with construction, so that's your hardware, your cements, your nails, all that stuff, the margins are so low and so tight. That is a cash economy. Unless fintechs come up with a way of ensuring that people and SMEs and corporates who work in that space are able to consume either digital money or mobile money or do any sort of electronic transfer of money without necessarily becoming a shareholder in their business. And for most of them, the margins are 3%, 4%. Yeah? So by the time you want to take 2.5%, 3% when your Visa or MasterCard, or by the time you want to take 0.5%, you have essentially become a shareholder in their business. So how do we start creating greater efficiency in the banking industry? How do we ensure that we start merging our ecosystems so that we become complementary services as opposed to competing? How do we ensure we retire certain things, like, for example, EFT? It takes 2 days, it costs 300 bob, it costs this. I mean, it has such a long story around it. How do we ensure that we start retiring some of those projects? So this is a lot of low-hanging fruit. The opportunities in fintech may not necessarily be all addressing the bottom of the pyramid, or it might be that they are addressing the current environment we work in. How do we clean it up, make it more, the word hygiene was used, hygienic was used earlier, more secure, and a better match for the customer.
Okay, thanks. So Ron, from your perspective, I think beyond what's been discussed, the payments area, lending, what do you see as real fintech opportunity?
Yeah, and first of all, there's been a lot of discussion about mobility. Basically transactions around mobile, basically making payments and all that. But now we have to look, when you look at fintech, you have to look at the whole spectrum. Because right now we're looking at emerging technologies. So as an institution, what is your core drive? Your core drive is to, number one, accelerate growth. Number two is to manage your risks. Those are the two most important parts that you're going to focus on. Now, how do you use emerging technologies? A good example is big data. Institutions collect a lot of data, but they don't know how to manage that data. So how are you going to leverage artificial intelligence and big data and to use it to enhance your business decisions? So I think fintech should not focus mostly on mobility. Mobility is a fantastic factor because mobility brings about what you call customer experience. You're improving a customer experience at the end of the day. You're bringing about efficiency, you're bringing about convenience and all that. But now we are moving towards how can we leverage on emerging technologies to bring about growing your business or growing a company. Yeah.
Good. I think something else, and probably in 1 minute, if each of you can look at it, is what do you see then being the real transition and impact at the bottom of the pyramid? Because a lot of us at the higher end of the pyramid, we are financially included. There's still a lot of people who are being left out. As Agnes says, 90% is still operating on cash. Did some research recently and found in many villages, people prefer to borrow from the shopkeeper. And the shop, they borrow, payday they come. And all this is happening outside the formal sector, despite your large entities that are offering, be it M-Pesa, M-Shwari, KCB M-Pesa. There's still a large opportunity, and recent research also showed it's about a 3.6 trillion need that's still not being met by the fintech. So what do you see as will be the key way and opportunity to tap into the bottom of the pyramid?
So the bottom of the pyramid, a lot has been done in that space to date. If you look at the work that has been done in terms of zero rating transfers and payments in that space, has led to some adoption. But the question is, how small can these payments get? The only way we are going to get there, where we get as many people to get banked or get into the formal space, I think, is we have to take really difficult decisions like they did in India in terms of getting rid of certain currencies, where you say we're getting rid of cash from a certain, let's say 500 bob downwards. If you get rid of cash, then everybody has to either have a wallet or an account. And that reduces and gets rid of inefficiency and actually reduces the transaction costs across the economy.
I think, just like Agnes says, a lot has been done for what we define as the bottom of the pyramid. I think one of the things we see at Oprah that's very exciting is the sincere number of users in Kenya alone really getting onto the internet. It's actually a very exciting story. We have a huge number of Kenyans who you term as below the pyramid, who are making a sincere effort to get onto the internet. But what are they doing when they get on the internet? Social media. It's WhatsApp, Facebook, and all the others, right? But I think there's a real opportunity now, and I go back to my point earlier on quality. We need to create these new business models, especially around fintech, and deliver them through these new mediums, through the internet. As the market is getting more sophisticated, as this bottom of the pyramid is now moving up, and then we can start delivering quality, I think, in 3 ways. One is literacy of consumers. I think we have quite a number of people who transact either borrowing money or making a payment, but they don't really understand what they've done. I think there was a point that was made earlier that M-Pesa is just a notification. But I think we need to, now we have an opportunity to sincerely deliver the literacy of, just because a loan application is there, doesn't mean you have to take it. You should take it when you need it. And I think that's the literacy we're very excited at Okash to have a discussion with consumers about and deliver this understanding of financial service, that you're getting this loan and you're getting this loan for a specific thing. The other area we're really looking at is purpose. And once you're able to achieve literacy, then you can have the conversation of purpose. And I think that's when you can start really making sense for consumers. Given that now they're significantly able to access a smarter phone, or even doesn't have to be a smartphone if you're using an Opera mini browser, but you can be able now to get a bit more information about the product you're accessing. One of the things we're looking at Okash is purpose lending. The ability to not just give you money on mobile money, but to actually answer a need that you have in terms of accessing the loan. And I think this kind of thinking is what is my third point, is moving away from iteration. Like I mentioned, I gave the example before, just because we had mobile banking, we thought, oh, because our business model is lending, let's put loans on mobile. That's simply iteration. And I remember literally trying to shrink banking forms into a USSD menu. And trying to figure out which ones are the most important ones and which ones do we need to include and kick out. My fellow bankers here can tell you, who've tried to put terms and conditions into a 140-character SMS. But, and we have to move from this iteration into what is predominantly known as first principles thinking. I think it was mentioned earlier. We literally have to look at how we deliver the entire service, not even the product, and start building it from scratch. Now, this is a very difficult conversation from a banking perspective, because you tell a banker not to use their core banking system, forget it. They have to use their core banking system for whatever product. But that's because the premise of banking has been to keep the money safe. And usually, that was the first promise we gave consumers when they walk into a bank. When you walk into a bank, you're bringing your money here, we will keep it safely for you. The best thing we can do for you is when you come and ask for how much that money is, we give you the right information. So the banking model has been built on trust and being able to allow that customer to trust you and being able to have those systems that can have the customer trust you. But the last 10, 12 years, we've clearly seen with mobile money, etc., that the convenience of transacting, the convenience of access means more to the consumer than trust. Such that the customer is demanding or has a very high level of expectation in terms of how they access this service. So I think the first principles thinking is really where the fintech opportunity is, not just for the future, but also for the underserved market. We don't think they're underserved. You should take a trip to Kawangware or somewhere else. These people are actively on the internet.
Actually, I'm going to answer that with a question.
Yes.
If you look at M-Pesa 10 years ago as now, do you see it as a disruptor, or do you see actually as it's bridging gaps? If I pose that question to you.
I think both. and I'll answer why. Maybe I was coming here to be the one asking questions, so I didn't prepare.
Yes.
But I think it's enabling disruption, but I think it's also bridged a lot of gaps. And I think time will tell eventually, because I believe a lot of people are building technology on M-Pesa. How much of those two it ended up being?
Yeah,
Go ahead.
because at the end of the day,
Yes.
M-Pesa came in for those people at the bottom of the pyramid, right?
Yes.
But now what you need to understand is, for you to be able to understand how the business models work at the bottom of the pyramid, you need to understand how they work, how the two individuals interact. If, let's say, for example, I do not have money, I'll go to my friend or my neighbor and borrow money so that you can be able to get something to cater for the financial need I have. At the end of the day, if you can be able to understand that business model, it's going to help you and understand how we're going to onboard them into either the financial institution or how they're going to use them mobile money to do transactions. So that is how M-Pesa was able to do it. Now, what you're moving towards actually, and something I really wanted to cover, is what you call peer-to-peer lending and borrowing. I believe you've heard something called Zidisha, Ubapesa. That is what they're doing. Because at the end of the day, if I know I have money and someone within my vicinity needs money, I can be able to lend. So this is what is catering for at the bottom of the pyramid. So if we can be able to implement such solutions, at the end of the day, it's going to capture these people.